What is going on, everyone? Welcome to our Finance Tuesdays. Hope you guys are having a great day and a great week so far. And I want to jump right into the subject. I want to talk about why I put my money in life insurance. I've been doing it for the past 4 years. I shared a video how I've already paid off over $50,000 of debt using life insurance. And in today's video, I just want to share why I believe in it and why you might want to consider it. And I hope this helps you out. One of the very first reasons why I use life insurance is the flexibility. I like the idea of where I can save my money and I can use it for other things. I can use it to pay off debt, which I'm doing right now. I can also use it for investing in the future because every time I borrow from my life insurance policy, the money doesn't disappear. It stays right there and continues to earn a dividend on an annual basis. The other cool part is when I borrow, I can pay myself back because I don't just leave the loan there by itself and pay a higher interest bill every year. No, I pay it back so I can use that capital again down the road, right? Another cool part is I'm saving on a regular basis. I'm protecting myself when emergency comes up, whether it's health, whether the car breaks down, whether, if I have a house, I have something in the policy. If I need to pull it out to take care of something, I've already been saving on a monthly basis and I'm protecting myself in the future in case something does happen. So that's one of the very first reasons I love life insurance, because of the flexibility. Another thing I just mentioned is I can pay myself back. And, when you're paying yourself back, it seems like a long journey, but once you're done, you're like, wow, I have all this capital I can use again. It's a nice feeling because you've been saving, right? And, as you're building your savings up, and again, this is not an investment, it's a store of value. I'm going to keep saying that over and over again. I'm doing all this work. Now, if I decide to use the bank, once I use the money, it's gone forever. I can't just, pay myself back. If you try to use a credit card, well, the interest is what, like over 20%. So that's not attractive to me. With a life insurance policy, I only have to pay, if I'm doing it right, between 1 to 3% of interest on an annual basis. So think about that. If you try to pay yourself back with a credit card, you're paying like what, 20% or more on a monthly basis. With life insurance, it's 1 to 3%. Now, the reason why I like this idea better is because I can pay myself back. I have capital I'm saving. And then once I'm done, I've got all this capital available to go out and pay off my next debt or invest. That's the beauty of it. And I'm also earning that 3 to 5%. I know that's not a lot, but I'm earning that as well on a annual basis. So that's one of the reasons why, one of the first few reasons why I love using life insurance. Now, I want to share my screen. I want to show you what banks are doing, because banks actually put their money in life insurance. I'm going to show you the top banks like Bank of America, Wells Fargo. They actually use this formula. So as you can see here, what do we have here? This is based off last year, September 30th, 2023. As you can see, this number here with Bank of America, that's like $24 billion that they have in life insurance. Wells Fargo, 18 billion. JP Morgan, 12 billion. As you can see, these are some, banks you see around, right? And they put their money in life insurance, right? So you have to ask yourself, why am I not doing this, right? Because if banks are keeping their capital there, there's got to be some reason for it, right? And another thing is it grows tax free. And here's the cool part. When you pay off a debt and you borrow from a life insurance policy, that loan does not show up on your credit report. It's protected from that, which is awesome, right? So you're making progress with your credit. You're paying your debt off. And then after you've done all that work, guess what you have left over? You got all that capital in your policy. Now, all that work doesn't feel as wasted, because if you go use the bank, well, guess what? At the end of all of that, after you pay for debt, guess what you still got to do? Save money, right? Okay, this is an interesting fact here. And let me zoom in so you guys can see what I'm looking at here. Actually, just looked this up today. Ooh, we went too far. Okay, hope you guys can see this. But as you can see, I'm going to highlight. This is based off of June 30th, 2023. Over 3,000 banks nationwide have reported that cash surrender values on their regulatory filings. So they have assets between 100 million and 1 billion in bank-owned life insurance policies. That's a staggering statistic. Almost 65% of banks put their assets in life insurance. Need I say more? Now, if you're not a believer in life insurance, I'm not going to try to convince you. If you think it's a scam, if you think, being your own bank is a fraud, hey, this video is not for you. But if you're one of those people out there where you feel stuck and you want to get a blueprint in place where you can have control of your capital, you can decide when you want to borrow from it. And again, I'm not saying you don't use a bank. Obviously, you still have to collect your checks, right? But eventually, you can get to a point where life insurance can replace it, because if you save enough money, and again, if you do this correctly, you now go out and use it to invest, and now you have that capital to work with, right? And again, if you're saving between $10,000 to $20,000 a year, you can say, "Oh, that's a whole lot." Well, you got to prioritize things, right? You got to start smaller than that. But if you can aim high, well, in 5 years, if you've already saved between, let's say, $15,000 a year, what is that? That's 15, 30, 45, that's $75,000 that you have available. And that's without the 3 to 5%. And that's without borrowing to pay off debt. And once you're done paying yourself back and you're still saving that $15,000 a year, well, guess what? Now you can go out and start investing in things. And you're also protected, because it feels good to know you have a lot of capital available in case something major happens in your life. And you can pull from that policy. Yeah, that's not ideal, but it's there to protect you as well. We live in such a microwave generation. We want everything so fast. And we live in a society where we got to consume everything and spend money. And, if I don't get it today, then, I'm not popular with the crowd and I'm not, following the trends. That's going to kill us in the end, because eventually we're going to be old, right? We're not going to have enough energy to work. And, we might wake up at 50 years old and realize, oh man, I got nothing for retirement. I got nothing stored and I'm not protecting myself. You don't want to be that person. You want to sacrifice. And if you can sacrifice a good 5, 10 years, that might be extreme. Well, you're still going to put yourself in a good position instead of worrying about the fancy car and all the fancy, clothes and, try to impress people. That doesn't really work out in the end. Right. So I would suggest, if you need some help here, feel free to shoot me hit me up. If you have any questions, love to hear from you. Make sure you hit the like button and subscribe to the channel, and I'll catch you in the next video. Peace.